Hello everyone and welcome to my channel Trading Journey with Bishwadeep. So today is my day 5 of making to 10 lakhs from 20,000. Today I will start with the Bank Nifty analysis that I have done the trading on 21st of August. Bank Nifty expires on every Wednesday. So on 21st it was the Wednesday. What happens exactly on the expiry days? On the expiry days, the premium prices of each of the indices is being lowered a little bit, and when the market comes nearly to the uh, market end, like at 3:30 or 3 o'clock, then the OTM positions all comes to the at the zero level. The price of all the OTMs comes at zero, and only the in the money and the ATM money is having that price movement. So that is the difference why we all the traders tries to trade in the expiry days, as the premium is low and they can trade at a large volume. So for that reason the maximum volatility for each of the indices happens on the expiry days. So starting from, let me go to the Bank Nifty. I hope everyone remembered this screener. This is called Trading View. You can easily access to all the indices, the stocks, the markets of US or the cryptos. You can view the charts of every other companies or the indices. So this is a great screener that we can have. This is the Trading View. 21st. Okay, I have not marked the resistance and the support, so let me just draw some of the lines over here. This is called the horizontal line. So when I put over here, see a horizontal line formed, but this is called a trend line. Here you can draw, you need to draw it manually, but there was automatically you could have done this. The horizontal line, it automatically comes whenever you place the pointer at that particular position, but the trend line you can usually I'll show you. Let me I have drawn one of the resistance line. See here, one of the wick and another wick is touching, right, when I put this horizontal line over here. So this becomes my one of the support and one of the resistance line. There are multiple, you need to always check that whenever we draw the resistance and the support line, please check the range also, that at what is the range for this support and the resistance line. So here it is 50,288 and here it is 50,684. So that is nearly 400 points of range. So there must be again 2 or 3 resistance or support line where the market can go in between those range. So let me draw again. See, you can see, when let me draw this line. See, you can see multiple rejections at this point, multiple rejections, and even there is a breakout, breakdown, and also the reversal. So whenever this sort of things happen in the market around a certain range, you can say at this 50,611 mark. So there you can see on the 5 minutes time frame there has been multiple rejections, breakouts, breakdowns, and also the reversal happens. So you must consider this is the strong support or the resistance line, and the market will always respect that line. Okay, let me draw another. Okay, let me draw this trend line. Fine, I've drawn the support and the resistance line. Right, see, now it is much more clearer, and you can easily guess how the market will react whenever the price comes down or the price moves up. So on that basis you can easily predict with the help of indicators. And also there are so many things behind that, each and every candlestick, the psychologies, whether the buyers or the sellers, the volumes coming in, then the reddish, the bearish, the sellers are coming in. So this is called the overall, so this is called the overall demand zone, right? And this is called the supply zone. So it will changes automatically whenever there will be a breakout. So the support line, or sorry, the resistance line will become the support line, and the support line will become the resistance line. So it's vice versa. So it will automatically happen whenever there is a breakout or breakdown, right? Okay, so coming on to the trades that I took for the bank nifty, I took short position at 50,000, 50,600. This is the strike price. I will clearly explain there is a difference between the spot price and the strike price. The spot price is the market price at which the market is running. So like you can say, like at 21st of August at 3 p.m. the market price was 50,601. So this is the market price, and by seeing the market price we buy the strike prices. Like on the different strike prices, the premium prices differs by seeing the how much far it is from the spot price. So it's totally coming on to the options chain. So uh, so it is a totally different game thing. So yeah, you need to learn about this thing, spot and the strike price, for the option pricing or the whenever you play for the option. So these are the basic things that you must learn before doing the options and the futures, even in the crypto or in the Indian market. Okay, so coming on to the positions that I took the short position at 928. Yeah, at 928 I took the position. Why did I take this position at this point? The market opened here. It showed me a, the market opened here. There is a bullish candle, but let me delete this and let me show you more. See this candle. This candle is having the long wick at the upper position. So whenever a wick, whenever a long wick is formed in the upper side, that means the sellers are in the market at a huge number. So that is why the pressure of sellers make the candlestick by making the like the dodgy formations, or by making the small bodies and long wicks. So that is why the sellers are coming in over here. So after that a strong bearish candle formed. So that is why I took the momentum trading, that and there was a small breakout over here, as it was a strong support line, so it break down, and that is why I took the trade at 928. But and you can also see the volume of the sellers and also the volume of the buyers are there in the market. So it can be a confusion state, that the traders will be really in the confusion state that whether to buy or sell. But since my setup tells me that there is a breakdown, you should buy it at that point. So I bought this at 179.05. This is the premium price of this strike price, 50,600, when I buy the put option for it, and I sold it at 187. 928 I bought, and 935 I exited that trade. There is also one thing you can check. There is hardly a difference of 7 to 8 rupees for each unit, or for each lot we are having 15, right? For the bank nifty, one lot size equal to 15. So when there is a movement of only 8 rupees, so it comes only nearly 8, right? What is the 132? So after cutting the deductions, I got 81. That doesn't matter. The main thing that matters, see, I'm telling you, whenever you see a spike, sudden spike, you will see the premium price also running in that manner. But when the market gets stabilized at that point, see the market formed and made three candles at this position, so showing that the market is wasting time over here, and the sellers have tried to exited the trades. They are not much more interested in taking the sell side positions, so that is why they are leaving and the buyers are coming in. And they also took the help of the support line, so there is a possibility that the market will get reversed from this position. So that is why I have exited the trade at 935. This is the first trade that I took. Second trade, at what time? 936. Just whenever coming on to the, I'm showing you why did I take this second trade also. So for that I need to show you the 1 minute time frame. Mm. 936, right? So whenever there is a continuous downtrend movement is going on, right, a candle has formed. Even though it's a big candle, sometimes an inside candle that forms, which shows us a pullback happens, and again the market will start continuing in that direction. But it had already touched or breached the previous lows and is going in the upward direction. Even though I thought maybe since it was making a bearish movement, there is a downtrend. The downtrend is here, and we got a sudden bullish movement, and it can be always a sudden bullish movement happens, or any kind of movement that happens, but it neither hampers or impact that particular trade at that moment. So again I drew this resistance line, and it should be coming down, coming in the downward movement. But since it was a strong support line over here, the market was wasting at that time. So I lost my premium over here above 554 rupees. Since again I took the long position at 1023, 1020, yeah, long position, right? Yes, 1023. Yeah, here I got. What was the strike price? 50,500, 134. So what was the logic behind it? It was simple, nothing. Here I must draw this resistance line, because from here there was a small downtrend, and again it was a fake breakout over here, and again the market came down, it got reversed, and it took the help of the support over here, and it got reversed. So there was a good trend in the market at that moment. So that is why I took this trade. But what you can say now, it was one kind of revenge trading, that I have lost all like 600 rupees by gaining profit in the morning, and again I have lost like 600 rupees. So what is the use of trading at that moment? So I must get my money back from the market. So it was totally a revenge trading at that moment. There was not a kind of one setup that I should tell you that the breakout happened. No, nothing. It was kind of sort of a directly of a revenge trading. So in the case of revenge trading, I lost the money, 391 rupees. Again I took a trade at 3 o'clock. See here, 3 8, right? It was nothing sort of an like a setup, but I thought at this point I took this trade because I thought it was in the uptrend moment. Let me draw this trend line. See, this is called a trend line. Whatever I have drawn this line, this is called a trend line. So this shows you like whether the market is in the uptrend movement or in the downtrend movement, or what kind of chart pattern formation is there. So this sort of things are being shown with this trend lines. Okay, coming on to the trade that I took, the market was bullish at that moment. There was an uptrend in the moment, and at the resistance line there was a formation of a doji candle. It kinds of shows me an evening star candlestick formation. So that is why I took a short on this trade. Yeah, short on this trade. But the market at when I took the trade, it was already 310. The premium was decaying much more faster as it should be, due to the theta decay, time decay, and the gamma decay. So I lost the trade and lost rupees like 133. So the overall loss was 997. It was a good loss. Nevertheless, we are still learning and we will be learning. So don't worry. Even though I lost like how much? I made a profit and then came back to eight. You can say 8,000 again coming to the 0 point. So there has been no loss, no profit. So we are currently running in the threshold phase. So it's okay. But we are learning something or the other. Yeah, so that was all about the Indian market. Coming to the forex market, I took a trade on the XAU and USD. So okay, let me change to the 5 minutes time frame. Hopefully I took the trades over here. Yes, probably here or here I took the trades. Let me check. 2511. Yes, okay. Here I took the trade 2511.93. Yes, this is the point where I took the trade. Yeah. So let me show you the reason or the analysis behind that. See, let me draw this trend line. You can clearly see the market is in the uptrend moment. The market is moving like a wave right now, coming. So whenever you draw these trend lines, this becomes your resistance and this become your support. So it is taking and oscillating in between the resistance and the support line, and you can say this is the zone that the market is moving, right? So yes, so there has been a breakout in the candle. See, there has been a breakout in the candle. So what is my setup? Trade when there is a breakout. Simple as that. But not like directly like that. I must follow some certain rules, because not a simple breakout. There has been multiple rejections from the resistance line. So that is why I took this trade. So it was showing me a good breakout for which I took this trade. So 251193 I bought at these positions and again exited the trade within this moment. I I should have waited a little bit to directly to take the whole profit from here to here, but I didn't wait. As by seeing the wick the market was coming down, so I exited the trade. Again, similarly I took the trade on the buy side from the extreme upper level from the over here 2515. 2515, I took the trade, but it got reversed from the resistance line. So for which I made a loss on this of 200 rupees. And again, when the market got reversed from this resistance line, then again I took the trade at 2510. 2510. Yes, that's where I took the trade. That's where I took the trade. And 2508, when the next candle formed at this position, I have exited the trade, since again there was a small support line was there, or the you can say a zone was there, from where the market got reversed again. So these were the trades on the gold, and I took the trades within, like, you can say within half an hour I took the all the trades. So it was not recommended for any kind of traders that you should be trading at this pace, like taking 3 or 4 trades within like half an hour of time. So it's not acceptable, because with over trading we are losing huge money. And also the mentality says that whenever you are sitting in front of any chart, like you are missing something, you need to do the trade, or else you will miss this movement in the market. That is called the FOMO, fear of missing out. And I will show you in the upcoming days that some of the trades where I have taken due to the FOMO fear, that I will miss this moment, and I'll regret this thing. So this made me lose some of the uh, good money. Okay, and let me tell you one thing. The trade that I took over here, right? It was okay. The setups was used, but overall, you can say at this moment, na 7:30, there was an announcement from the Powell, Powell from the US, who was giving some advices or some speeches on cryptos, for which, or the repo rates or something. So there was, I'm not exactly I didn't exactly follow that news at that moment, but at that moment only there has been a huge spike in all the markets, whether it's gold, BTC, Ethereum, whatever market you name it. So there has been a sudden spike in the market, and it reached this point, and again uh, the market was correcting their positions. So yeah, so this sudden spike is an impulsive spike, and it suddenly comes like rare when there is being a news in the market, or something is happening around the world. So that is why there should be a sudden spike in the market, or else you can see the market show some volatility while there has been some sort of small newses. So these were the trades of mine on day 5. So let me take you to the overall PNL. 997 loss, 98 profit. Overall net PNL on the negative end, that is 899. So overall total capital is 19,586. So yeah, so see, it's no profit, no loss. So that's all from day 5. See you on day 6. Thank you everyone.